So for people who don't know you, tell us about your background and why is sustainable investing such an important topic to you?
So my background is in financial services. Been around since pretty much the early '90s in the industry, mainly for traditional um, life companies and investment houses. And around the time of the financial crash the global financial crisis in 2008, it really made me rethink the purpose of investment and also my role in the whole industry. And I came across something called impact investing, which is investing for a positive social or environmental impact, an intentional approach to that type of investing, but also for a financial return. And it was something that really inspired me when I saw it, because it was so contrary to what we'd seen in the financial crash. And that was what I was looking for the next season of my career. And I was fortunate enough to be able to take a decision to step outside of the mainstream and start to look at how we could develop this as a market in the UK. And I set up Worthstone in 2010 and to focus exclusively in this area. And the rest is history, as they say. So that's what brings me here today.
Oh, brilliant. And before we start talking about this fully, what do we actually mean by sustainability in 2026? Because it means something very different to what people think it means. And I think people have got very confused about even where we are now. So what does it mean to you?
So I think, yeah, I agree. I think that the whole area of sustainability, in terms of from an investment perspective, has evolved over the last couple of decades, really. And we're much more aware now of the impact of our investments from a positive or negative perspective. And when we think about sustainability, we're thinking about all the positives and the negatives. So, there's no such thing as a pure investment. Everything is a compromise in an investment. There are good elements to it. There are negative elements to it. And again, it depends what frame of reference you're using, what filter you're looking through, what lens you're looking through, based on your own personal perspectives and life. And so sustainability means different things for different people. There are loads of labels and tags that are thrown around related to sustainability. I like the overarching term of responsible investment. So thinking about investment, taking a responsible approach to your investment journey. But yes, sustainability will mean different things to different people. And it's really important that we think about that when we're talking to the end investor, to understand what they mean when they're talking about, or whatever label they use or attach to it, or the way they think about their investments, whether it goes beyond the sort of intellectual exercise on a spreadsheet to what that investment is actually invested in and what it's doing, what the underlying companies they're invested in, what they're doing.
Yeah, I think it's very true, and we'll talk about it a lot, I imagine. But people go, "Oh, it's guns and tobacco," and it's like we've moved so much further away from that. It's about climate control, and that's much more where it's focused now, isn't it? When you think about sustainable investing.
Yeah, I think the other interesting thing about sustainable investing is, as you're sort of describing, it's fluid. So, a few years ago, the big thing was eliminating or excluding, negatively screening, those sorts of terms were used around some of what they called the sin stocks. So things like arms and tobacco and pornography, other, areas of the industry which people don't particularly like necessarily, or some people don't like. And the focus of sustainability now has evolved to looking at carbon footprint, the climate, and the warming of the planet, science around that, and what that means for investment, what the impacts of that could mean longer term, and how the investments we're making as individuals, the ones that we want to be associated with, how they're impacting on those different areas. So it comes back to that point about, it'll mean different things to different people. But I think we're much, in our society today, we're much more aware on a whole load of different levels, and certainly around sustainable issues, we're more aware, whether it's, walking down the high street and looking at fashion labels, or anything really.
Wow.
There's always a sustainability story. Well, there's usually a sustainability story attached to many of the leading brands now. When if you only look 5 years ago, it wasn't even really talked about
Yeah.
or mentioned.
No, absolutely. So saying all of that, why is it still so cliquey and bespoke? People think, oh, you're into like it's still got this sort of stigma attached to it. Why is that when we all think about sustainability all the time?
Yeah, I mean, Helen, I don't know if we think about sustainability all the time, but
All right.
it's definitely like front and center for a
Yeah.
lot of people. Why is it still cliquey? That's a really good question. I'm not entirely sure. I think sometimes the industry can build a whole load of language and terminology around it, which can exclude people. It becomes very technical and, bitty and politically it's been used, it's
Yeah.
been sort of used from a political perspective as well. So you see it talked about a lot in politics. Um, it's an area that can be divisive, I think, because of the politics
Mm.
involved. And I think just the nature of, when you become a specialist in anything, you almost want to exclude other people. I know more than everyone else, kind of thing.
Yeah.
And you build up these walls, and that's what happens. But our mission when we set up Worthstone was that sustainability would become a valued decision-making tool in every investment decision. So we think sustainability, you should be looking at sustainability across everything. It shouldn't be a clique. It shouldn't be a niche.
Yeah.
It shouldn't be segregated as a strategy. Shouldn't you, if you think sustainability is important, shouldn't you be looking at it as a lens through everything you do, and particularly around investment?
Well, I think that's the point, isn't it? And you think about in day-to-day life, we all sort of behave, well, most of us quite sustainably. We recycle, we do these things, and it's sort of, you just do it by default now. There isn't really a point where you think, I'll chuck this in the road or I'll do whatever. But we really do stop and think about it when it comes to investing. And I mean, why do we think that is?
I think it's because it's outside the norm. So it's outside of the regular way in which the profession has thought about it, the industry has thought about it, and it adds potential complications. It adds another layer of analysis which some people aren't comfortable with. There's an argument that the data around sustainability is not as developed as financial data, so there's a lot more contention around what's good and what's not. So there are lots of things. This is an evolving sector. It's relatively nascent compared to financial analysis, which goes back over 100 years. So it's developing, and I think we're also we default to what we know best.
Yeah.
And I think there's a potential as well that when you look through a sustainability lens, you might weaken the conventional wisdom around investment, and people don't like to enter into areas where they don't have enough knowledge or they don't feel confident that they know everything, and that's why the conversation becomes a little bit more guarded.
And do you think that's what the real objection is to it then? That people, I mean, when we talk about sustainable investing to people, they say, well, it's performance, it's price, those are the things that come up time and time again. Is that what we think? That's it? That's the problem?
So I once heard this phrase used around sustainable investment, and I think it's really powerful and it's very, very true. New ideas are always held to higher account than business as usual. And sustainable investment is seen as a new idea, even though it's been around, for a long time. Since, if you look at it from a negative screen perspective, like we talked about, that sort of ethical investment, that's been around since the sort of late 1700s, when the Methodist Church decided they didn't want to invest in anything that had exposure to those sort of areas that we discussed earlier. So it's not something that's new, but it's something that's seen as different to a traditional approach. And as I say, I think, you know, we're more frightened of it because we don't fully understand it, and it's a different way of looking at things. So we kind of park it sometimes when actually we should spend more time really understanding how it can help us to understand traditional investments as much as the objective of trying to achieve a good, you know, highly sustainable return, a sustainable outcome.
And I suppose that's the thing, isn't it? You know, with investing, it's not tangible, really, is it? It's not something we can touch and feel and worship. Whereas everything else that we do is. Like, we can see it, we can see the results, we can see the outcome. Whereas investing in itself is something of a unknown because we can't judge it. We're never sure what's going to happen. So it gives it even more of an unknown when you add that extra layer on.
I think you're absolutely spot on. You know, it's very difficult to prove that something is going to be sustainable in 10 years' time. So if you're saying, I want to invest for this positive outcome, we just don't know. We can be guided by data to say, you know, this company in this fund are doing really positive things. They're investing in products and services that are going to help to alleviate some of the biggest problems we've got around the world. But are they actually going to be successful? You know, are they going to generate a positive outcome? We can't honestly, hand on heart, say they will. But isn't it the same with traditional investing, where you can invest in something to achieve a financial return, but it's not guaranteed. You don't know that that's definitely going to produce a positive financial return. So in some ways it's similar, but again, coming back to that point about the known versus the unknown, I think we are more familiar and more comfortable with the data around the financials than we are with the data around sustainable signals and metrics, and therefore we default, as you said earlier, to that traditional approach because it's something we're comfortable talking about.